Good evening, everyone. Time for another silver update. You're looking at a weekly chart of the dollar yen. As you can see from this chart, the dollar is very sick against the yen. Got a couple of trend lines, one going all the way back to 1998. We have a fairly steady decline that accelerated starting in about the beginning of the recession, roughly summer of 2007. We started a new trend down, and you can see we're now rolling over to the downside. The trend in the MACD is also down. It kind of follows the same trend up to the second one. Actually accelerates from this point, so it doesn't quite match up, but it's very similar, and you can see we are rolling down. So I fully expect new lows in the dollar yen. Now, there has been central bank intervention. If you pull into a tighter view, you can see that we have a number of instances. We want to get something where we can see the Fukushima low, but we also want to see this intervention. We actually had a touchdown right around when the debt ceiling debate was going on, this time period. You can see that we had a central bank intervention. And we'll pull up the volume chart so you can see it. The signature of a central bank intervention is drastic price move in an extremely short period of time. The reason why central banks act in this manner is to punish speculators who are trying to take a profit from a fundamental picture. So people are under the impression that it's technical traders that are the speculators. Actually, it's not. It's people who can see the writing on the wall. But the central banks intervene in currency markets to make sure that anybody who uses stops, and most technical traders use stops. So if you have a trader who's trying to make a fundamental play against a currency and is using stops just in case this sort of scenario, they're going to get blown out of the water and take massive losses, and that's the intent. So if we pull out a little bit farther to where we can get the Fukushima low, that was another instance of central bank intervention, and we're going to have to go to the 4-hour to pull that out now. And this right here is the Fukushima central bank intervention. This, if you remember, I commented when that news story hit that this sell-off was quite reasonably explainable as being the Japanese investors selling off their assets. So obviously Japanese government and Japanese companies, etc., had to raise cash looking at the tremendous damage that was happening. So this is a normal reaction that you have, a fundamental reaction. Now it's triggered, of course, in the technicals, because you can see this trend line I'm drawing right here. This is where the technical signal would be given, and you can see that it had a spike down and then off the cliff. So excellent technical sell signal given, but then counteracted, if you remember, by actually an emergency meeting, I believe, of the G8 to intervene. And you can see they ran from 76 to all the way to 85. So an enormous move. Now this is market manipulation by central banks. This is market manipulation by central banks. So yes, it's despicable. Yes, it's predictable, but ultimately you can see what's the result? Failure. Because it's similar to the intervention by the government or the government's proxies in the silver and gold market to artificially suppress the prices. Obviously, it's going to end in failure, because markets are greater than governments. So ultimately, the market will out in the end. So let's look over at the Swiss franc, and this is actually an intervention that is still going on. The low we touched was almost 70 Swiss cents to the dollar. We're up to 79, so you can see that's a big rally. That's 70 to 79 is more than a 10% rally. We're still in a declining trend, and we haven't touched this, so maybe we'll get something right up to this line and then turn down here and go back down. That would be my best guess. But this is central bank intervention, again, trying to strengthen the dollar against the Swiss franc. So I wanted to use that to segue into another issue of government interference in markets, and that's one that's come up recently in the comments about a number of people talking about confiscation. So I wanted to clear up a number of things, and so we want to jump right over to the quote-unquote confiscation that happened in 1933, which is Executive Order 6102. And I'll read a little bit of this to clarify what I'm going to talk about. The first thing I want to point out is this wasn't confiscation. For there to be confiscation, confiscation implies that the government goes house to house and, just like the gun take your guns or whatever it is. Go house to house and take your gold. Well, they didn't do that. They didn't go house to house, and they didn't take anyone's gold. They passed a law saying that after a certain date it would be illegal to hoard quote-unquote gold, and that you would have to sell your gold to the government before that date. So let's read a little bit of this. Executive Order 6102 is an executive order signed on April 5th, 1933 by U.S. President Franklin D. Roosevelt, quote, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States, unquote. The order criminalized the possession of monetary gold by any individual, partnership, association, or corporation. The order was rationalized on the grounds that hard times had caused hoarding of gold, stalling economic growth and making the Depression worse. The New York Times on April 6, 1933 wrote under the headline, Hoarding of Gold, the executive order issued by the President yesterday amplifies and particularizes his earlier warnings against hoarding. On March 6, taking advantage of a wartime statute that had not been repealed, he forbade the hoarding of gold or silver coin or bullion or currency under the penalty of $10,000 fine or 10 years imprisonment or both. Executive Order 6102 required U.S. citizens to deliver on or before May 1, 1933 all but a small amount of gold coin or gold bullion or gold certificates owned by them to the Federal Reserve in exchange for $20.67 per troy ounce. And it goes into the trading with the Enemy Act and all this stuff. And don't get me wrong, all this is, in my mind, completely despicable, because obviously it wasn't the hoarding of gold that was the problem, it was the Federal Reserve and what they did. And I don't want to go into a history of the Depression and why our modern history books are false, but this is not the way it's portrayed. But anyway, I wanted to emphasize this price here. Now, if you remember, the price of gold was $20. So giving you $20.67 on an ounce is roughly giving you 3.5 cents, let's say, on $10. It's roughly 3%. So they paid a 3% premium for you to turn in your gold. Now, the date of this executive order was April 5th, 1933, and the date that it gave for this to occur was May 1st of 1933. So, at the current price that gold was trading at, you actually made a 3% profit. So you could have gone in on April 6th turned in your gold for $20.67 per ounce and turned right around and bought, and you can see what's exempted here: artists, jewelers, dentists, and sign makers were exempted, and collectors of rare and unusual coins. So you actually could have gone out and sold all your gold to the government for a 3% profit and turned right around and bought gold, although it might not have been available. Or you could have bought land, or you could have bought a lot of other things. So, not saying this was a good thing, obviously, but it was not a confiscation. So that's an important distinction that we need to keep in mind. And I wanted to talk about what people are talking about with what they're saying is going to be a silver confiscation. This has to do partly with the FOFOA article and critique that I need to complete, the last topic, but I wanted to look at, first, let's just get an idea of the numbers we're talking about. Let's jump over to the Eagle series. This is the Wikipedia entry on the American Silver Eagle. And if you look at the totals we have through 2010, with both the uncirculated proof and bullion, you add them all up, you get about 260 million. I think if we add in what's been done this year, and we're not done with the year, so we could probably just give a rough number of 300 million. So we're going to do a lot of calculating here. So let's just take our Silver Eagle. We've got 300 million times our current price of 40. And that gives us about $12 billion. So keep that figure in mind. All the Silver Eagles totaled are worth about 12 billion. So let's jump over to the Gold Eagles, and this isn't from Wikipedia because they don't have the mintage. I don't know why. This has both the silver and the gold. So this is 156. It's roughly twice that. So we'll just take this gold. We'll double it. We're just guesstimating. So we're going to say there's 20 million Gold Eagles. So if we do the math on the Gold Eagle, we've got 20 million times the current, we'll just say 2,000. And that gives us 40 billion. So if we're looking at the Eagle series here for purposes of confiscation, we'll say that if they confiscated all the Gold Eagles right now, they'd get about 40 billion bucks. If they confiscated all the Silver Eagles, they'd get about 12 billion bucks. So not really a lot of money. Let's keep in mind the fact that we're looking at we've got a 14 to 16 trillion dollar deficit. They just raised it up, so it's probably over 15 right now. So let's just say $15 trillion deficit. We're talking about 40 billion. So that's, I don't know, let's do the math. 40 billion divided by 15 million billion trillion 0.002%, or I'm sorry, that's 0.2%. I think that's right. I have to go back and do my math. Anyway, it's a minuscule amount. So we're doing about $1.5 trillion in deficits every year, and the value of the Gold Eagles is 40 billion, and the value of the Silver Eagles is 12. So obviously, at current prices, they're not going to get very far by confiscating that metal. So let's look at the full metal on the gold. And as you know, if you followed gold, that I've talked about the fact that because gold is so valuable, and because gold is not nearly as much of an industrial metal as silver, but you combine the two, the fact that gold is as valuable as it is and its uses, you get a result that roughly 99% of all the gold that's ever been mined is still around with us. Now, that's held mainly in central bank vaults. Where those are, you can debate that, but it's held by various countries. And I'm not going to debate the figures because I'm just going to use round numbers. The number I've chosen for gold is about 10 billion. That's a figure that is disputed, but a lot of people have arrived at roughly that figure. We know that we mine in the world about 100 million ounces a year. So what do we get when we do 10 billion divided by 100 million? So we get about 100 years. That's a little bit inaccurate because we're getting a lot more gold every year than we used to just because of mining. But that basically goes back to Babylon. So we want to take that total amount of gold, which pretty much is still around, and look at the value and what that would be if they confiscated it. Now, obviously, not all that gold is in the US, and some would argue that very little of that gold is still in the US, but let's just talk about a worldwide figure just for sake of argument. So let's take 10 billion ounces of gold times the current price, and that's going to equal about $20 trillion. So you compare that to the numbers we have floating around. That's obviously 5 trillion higher than the national debt of the United States. Now remember, we're comparing all the gold in the world to the national debt of the United States. If you compare it to the money supply or the various figures for derivatives out there, some have talked about numbers as high as 600 trillion. Others have talked about actually numbers in the quadrillions. So at current prices, if they confiscated all the gold in the entire world, they'd get about $20 trillion. So obviously with that figure, gold is still quite undervalued if it's going to end up backing some type of world currency. So let's do the math on the silver. I'm going to use the figure of 5 billion. I actually think that's very optimistic. I don't think there's nearly that much above ground. But we'll go ahead and use that figure. So let's use the figure of 5 billion for the silver. And we'll multiply that times current value. We come up with a figure of $200 billion. So if they confiscated all the silver in the entire world at current value, they would have about $200 billion worth of silver. That is 1/7 of the current deficit. That's 1/7 of the amount of money that we're piling on our debt every year. So you can see that at current prices, the idea of confiscating silver is absolutely ridiculous. So let's imagine, and I wanted to, before we do that, I wanted to use another figure. Let's just say we have 1 billion ounces of silver. Let's say we use the silver that's mined every year. We'll use that as a rough figure. About 1 billion ounces of silver is mined every year. So let's say that instead of having silver used in industry or by collectors or by anyone else, the government just takes that silver for their monetary purposes. Let's say they do that for 10 years. So we've got 10 billion ounces of silver times the current price. and we get $400 billion. So if the government confiscated all the silver that's mined in the world for the next 10 years, they would only get $400 billion, which is roughly a quarter of our current deficits. So you can see that the price of silver is so low relative to the paper money that's out there that confiscation is a ridiculous notion. Now, let's finish up by looking at what would make it in their interest to confiscate it, where it has to be. So let's say that we have, well, we're doing 1.5 trillion a year in deficits. We have a $15 trillion debt. So let's just use the existing debt and say we have 15 trillion and we want that to be backed by silver. So we're going to say we have 5 billion. So just for the existing national debt to be backed by silver, it takes $3,000 an ounce silver. That's if all the silver in the entire world is used. Of course, we know it's not all in America. So we're looking at a figure that's a multiple of 3,000. We don't know how high. If we're talking about the money supply, then the money supply is with all derivatives and paper and everything. For silver to back that, we know that it's roughly, some say 600 trillion. So that's going to be a figure that is 40 times this figure. That's going to take $120,000 an ounce silver to have silver back that amount of debt. That's to have all the silver in the entire world back the amount of money. So the point is, you can see from these figures that talking about gold confiscation right now is absurd. Talking about silver confiscation in regards to the size of the debts that we have is so utterly absurd that it's unthinkable. Silver needs to rise at least 100-fold from where it's at for there to even be any benefit whatsoever for the government to confiscate it. And really, because we're talking about the United States alone and the amount of silver in the world, it's really more 1,000-fold. So silver needs to go to roughly $30,000 or $40,000 an ounce for it even to be in the interest of government to look at it to confiscate. And you can see we're a long ways from that price. So I think that any discussion about confiscation probably isn't even a serious discussion until we're talking about 4-digit silver and possibly even 5-digit silver. And you can see we're a long way from that, but I think we're going to get there in time, and we'll talk to you next time.